This video is sponsored by Gate.io. If you set an account up using the link in the description, you'll get 25% back on all your spot and futures fees for life. Gate.io. Good morning, everybody. Right, I'm back at home now. Let's have a proper good hard look at all the markets and yeah, we'll see what's going on. Okay, right. So the Dixie, despite being above the moving averages and coming down to retest it, we're not exactly convinced that this is where a breakout can take place. At this moment, it is still a series of lower highs and, well, lower lows, I suppose, which might mean that we come down to create a new lower low. We didn't get any kind of pump signal on this Dixie, and we avoided it ever so slightly. It was pretty tight. Just about to slide a Rizzler paper between this, but there was no pump signal generated. Now, you know, we are sitting around this 200 exponential at the moment, but just below that is a 10 exponential that comes in with a descending trend line, and then obviously, you know, lower down we've got millions of, well, not millions, but a handful of supports before we can actually say, all right, maybe we're going to come back down to the 100 and maybe break that later on. Now with oil, which is the main concern with CPI reads, oil did get rejection at the 83. It hasn't yet broken that, which is good because this has been my main concern this last 4, 5, 6 weeks or so, is that this rally was going to get extended. At the moment, below the Bollinger Band, probably looking for a golden cross retest around 77, where if we're going to get some kind of move on oil, this is where it's going to come from, and this could be the area that it bounces from that goes back to the 83 and maybe beyond. So it might be worthy of a stab in the dark. We've also got an incoming golden cross on simple moving averages as well, so a bit more of likelihood that this is where a reaction would take place, which is basically down at 76.2. It is technically bullish, and this is a daily that we're looking at. Obviously the 4 hourly is going to be bullish. The daily is potentially going to break bullish soon, and we'll know if we are bullish if we remain and get supported above either the 76.2 or the 78, which is where these golden crosses on simples and exponentials are about to take place, really. It's unavoidable as far as I can see, really. And so if we bounce from there, which I think is a good chance, then 83 is back on the table, probably almost a guarantee, and see if that breaks from there. And this, like I say, will feed the inflation reads for the rest of the year. Now, sometimes these inflation reads are extremely lagging. They are. There's nothing. It's not. It doesn't take an immediate effect for the CPI, but for traders and markets, we can look at this and go, well, we kind of know what's going to happen if this happens. So we can price this in. The markets will price this in, and this is why we'll likely see oil move up while indices, stocks, and alike will come down, because the market is already pricing in these higher CPI reads. Again, until we break 83, the market is kind of undecided, and it is undecided. Let's stand back and have a look at the S&P. This is S&P Futures. No, it's not. This is general S&P Futures. Here we go. Looks a little tired, I have to say. We take it to a weekly, we can see that there has been a front run of support on the last week's close above the Bollinger Band Center, so higher term time frames, still looking like an uptrend as far as I can see. There was no bearish divergence on the highest term time frames or anything like that, so this is markets kind of pricing in a potential oil move and a Dixie reversal, so a Dixie breakout. So the S&P could form we'll call it a dead cat bounce, at least from here. It looks like it's working on that at the moment. So if that is the case, we'll take it back to a daily, have a look at the targets. The targets could be one of two areas. First area would be the area that was lost, the 4,451, so just another $50 from where we are right now, and a potential Bollinger Band retest as well. And again, it's pretty steep here. It's pretty steep. MACD below the 0 point. There has been several drives of hidden bullish divergence on the way down. It's nothing amazing, nothing really to write home about, but there is evidence enough to say that, yeah, we could probably see that bounce, and that bounce take us up another $50. So, that's okay. That's okay. Right, let's have a look at the euro then. What are you doing? So here we go, 4 hourly, death cross retest all the way down. But on the 4 hourly, we are moving up. Money flow index is quite high though. On the 4 hourly, it's not massively high. It's reasonably high. 2 drives of hidden bearish divergence, which hasn't played out really, so that's fine. We're about to cross above the 0 point, so it does look like we have the power to move us up to 109.6, and we'll check the daily. Which is likely to take us to 109.6. So 109.6 is the target for the euro in the short term. If we break that, then that would be great, because then maybe we could look at this as maybe just another area to buy the dip from, or should we just say that markets can resume with the uptrend until further notice. But 109.6 is the area. Again, the daily hidden drives of bullish divergence, so that's all right. Sorry, drives of hidden bullish divergence. Interestingly enough, Bitcoin dominance creeping down. So I don't know exactly what to make of this. It could just be the calm before the storm, before altcoins get completely wrecked once again, one way or another. But it has been creeping down really since the 52% dominant. Fair enough. Don't really know really what this reflects or really what it means. It's just an observation, but personally, if we are consolidating gently, which we are on a chart like this, and we're approaching potentially the 48 and maybe 48.5, probably see a bounce from there, which is unfortunately not going to be good for altcoins. So it doesn't look like a bearish chart. I wouldn't want to say that this is about to break down. If anything, it probably does look like it's going to bounce. Right, so that leads us into the Big Daddy Bitcoin. What's going on over here? Not Atom, but Big Daddy Bitcoin. So if we look at the daily, we're below all major moving averages at this stage now, with the 24,300 area as like a major support. Let's take it to a 4-hourly, where the Bollinger Bands are pinching extremely tightly. So if there's going to be a move, I think it's probably going to happen today, tomorrow, and this will be a volatile move. We might see a push. To be honest, you could even see a push all the way up into the 28,500 area, the area that was once lost. We've got moving averages sitting around there. It will be a death cross retest, because this was a pretty steep and significant and speedy drop. So to see a bounce to move all the way back up there for a death cross retest is not unlikely. Also, that 28,500 was the support area that held for such a long period of time, and so it would not at all surprise me to see that. So we've got the MACD really ramping up its velocity towards that 0 point, but obviously still quite significantly below that. The MACD, the RSI, and the money flow index all creeping up as well. So momentum does appear to be moving towards the up. So a breakout towards the upside, probably at this stage now, is more likely than further breakdown. But just to put it into context, if we do break out and move away up to the 28,500, we've got the Bollinger Bands here. We've got the so you see your 20 moving average, the Bollinger Band center. We've also got, as we saw, the 200 exponential on your 4-hourly. Also the 28,500 area, which was like a decent support basically. So I'll be looking for a move all the way back up to that level, to then basically get rejected and basically hang around in these lower zones really. Further accumulation really, anywhere below 25,000, where the volume was extremely high back in the olden days. Smart money coming in. I think that's basically the floor. Anything below 25,000, you could join the whales and where they bought their Bitcoin and basically see it as a relatively safe investment zone for the long term. So pretty sweet stuff in the short term for a bounce. And again, if we lose the 25,000, anything below that would match the volume that we saw down here, and I think the buyers would step in. And even if they didn't, it would be slow and steady wins the race. Accumulate gently below 25,000 for Bitcoin and enjoy the fruits later on down the line. So to be fair, let's have a very short term look on a 1-hourly. Again, look at the size of these candles on the 1-hourly. There's really not a great deal between it. Also, there's not really much volume. There's also not really much give in momentum. But if we had to reflect upon this 1-hourly, I would definitely say that there is no signal. There is no setup. If there's going to be anything anywhere, it is based on that 4-hourly with the brewing momentum that could break with the Bollinger Bands that are pinching, with a volatile move that's probably more likely to break up then down. Let's face it, we've had a decent move down so far, with the Dixie looking like a rejection in the short term, again ever so slightly, with stocks looking for a bounce at this level ever so slightly, and Euro obviously potentially going to move up to 109.6 and then maybe break from there. I think the odds are in favour of further upside at the moment, but be prepared for nothing more than a lower high. But that lower high could be a sweet move on Bitcoin. You can only imagine that Bitcoin will take altcoins with it. So we are looking for a move of up to 9% really on Bitcoin. So maybe we see some, well, I'm sure you will across the board see some really big moves for altcoins, but that doesn't necessarily mean that altcoins are the better state of play. Altcoins are effectively just being carried with the market, and I find it really difficult to look at altcoins and have found it pretty hard for a couple of months now to look at them and take their setups seriously, because you do get signals and setups on those altcoins and they have just not been, they've just not been following through. It's not been the traders market in times past. It really is a Bitcoin driven market, and Bitcoin, as much as we love it, it's basically just following traditional markets, and even not as good as that. So stocks and other things like gold and Forex even, they seem to play quite well and respect the setups quite well, and even Bitcoin hasn't really done that particularly well. So traditional markets actually a much better, more reliable place to trade from. Well, surprisingly, it's not really surprising at all when we talk about volume and market caps. Obviously, you're gonna have more appropriate setups that play more regularly, but if you're going to play anything with altcoins, I suppose you have to think about them in terms of I suppose trading them as a proxy of the Bitcoin chart. There's really nothing much more to say about it than that. So long story short, in summary, Bitcoin probably going for a dead cat bounce, a death cross retest, a lower high, as is what I would believe the rest of the market. And we'll see what happens. CPI not too much of a problem as yet. Breaking 83, building a base above oil, $83 a barrel oil, probably will be a problem. Right, I'll leave it with you there, but there is a live stream tonight if you want to join that. Patreon, links in the description below. Other than that, hope you have a nice day. Take it easy.